Welcome back, traders, investors. I'm Jake LeCure. Welcome to Pre-Market Info. For those of you guys just tuning in, with us is Scott Moeller, the Director of M&A Research at the Cass Business School. Scott, how you doing this morning?
Okay, how are you doing this morning?
I'm
Actually,
doing.
it's afternoon over here, I have to admit.
Oh, that
Oh,
right.
that's right,
I
because
guess.
Scott's over in England, so we
Oh
had
my.
to we had some scheduling conflicts when we were putting this together because he's teaching during the day
Oh
and then we're
yeah.
wrapping it up at night. But we're
Yeah,
just
but that's
getting
okay.
started here.
Not anymore. They're off on holiday right now.
Oh, very
Alrighty.
nice.
Well,
Yeah, I know. I know. Academic holidays. I should be too.
yeah. I was about to say, wait, why are you at work if everybody else gets a holiday?
Marking papers. Ugh.
Ah,
Oh,
that sounds fun.
so why don't you go ahead and give us a little bit of your educational and market background, Scott?
Yeah, although I'm a professor now of finance here at the Cass Business School, not many people know it in the U.S., but where most of your listeners are. But it's one of the top 20 business schools around the world, at least according to the FT. Um, Before that, I've been here about 12, 13 years, but before that, I was at Deutsche Bank, did M&A, corporate finance, and private equity. Before that, I was 12 years with Morgan Stanley all over the world. After Morgan Stanley, I mean, before Morgan Stanley, I was there at Booz Allen and Hamilton.
Hmm.
So all in all, you kind of add that up, and it's been quite a long time, needless to say. So
No kidding. So what exactly prompted that move from the private sector to more the education side? I mean,
Oh,
is it just
I
interest
have to
or?
admit, I didn't actually plan it.
Hmm.
I was asked to do a lecture or two here at actually Cass Business School and also at Oxford. And then um, when after having done that once or twice, there were a couple people who were saying to me, "I'll tell you what, why don't you actually come in and teach one of the classes?" And it turned out to be the class on mergers and acquisitions. And then once I started doing that, one thing led to another. And I have to admit, a team of wild horses couldn't pull me back into into the business sector. It's great here being here in academia.
Yeah, I was just
So
about to ask if you had ever considered doing something like that. Now, when you're, I guess this is kind of a little bit off the list, but when you're doing on the academia side, do you do like consulting on the side, or are you just completely focusing on teaching, or how does that work? 'Cause it's always kind of
yeah,
interested me.
I do some. I do some of that. Not as much as I think a lot of people think that
Hmm.
academics do, because on the academic side, it's really quite nice to be able to focus on that once you actually start into it.
Hmm.
But on occasion, I do get asked to talk to companies about some of the M&A side of things, but it's not like I'm out there sourcing deals these days or anything like that.
Yeah,
So
absolutely.
Yeah, giving a little insider info, trying to
yeah,
pocket a little
exactly,
something for yourself on the
exactly.
side.
That I can't do. I always tell my students I can't really be doing that. Actually, one of the things anyway is a lot of the students just think that I might be a way to be able to help them get a job. And one of the things I do tell them when they take my mergers and acquisitions class is that if they do go to a Goldman's or they go to a J.P. Morgan or a BAML or one of those, that they'll probably reteach them anyway about the way that they do it. So, but anyway, it's still a lot of fun, and especially now I've been doing it for 12 years. When they all start getting promotions to managing director and so on, it's nice to see them back here. So
Definitely. I do kind of moving more over to, I guess, the M&A market itself.
absolutely, yeah.
Uh, you know, do you think that like social media plays any kind of role in the M&A market? Does it like help? Is it cause any predictability in it, or what do you think?
God, that's a fantastic question. And the reason I say that is we happen to be doing a study right now looking at exactly that. And one of the things that seems to be taking place is that we're going to be moving a lot more into sourcing deals through social media.
Really?
Believe it or not, through things like LinkedIn and so on. That's not to say that if one is in one of the big bulge bracket investment banks or one of the boutiques, that people are not going to come to you for deals, or you're not going to go out there and actually source deals to clients. And pitch them that way. But we are finding an incredibly strong increase in people trying to contact through that. And it's not just the fact that people like Twitter are announcing the pricing for their IPO, on Twitter, which obviously kind of made sense for them. But we're seeing others really trying to move in that direction as well. Although I will tell you, it's causing the regulators, at least some of the regulators I speak with over here in Europe, some real headaches as to how they're going to be able to monitor that and what that's going to cause in terms of things like insider trading or
Hmm.
leaking of deals and things like that. So
Sure, I can imagine that would be quite a headache. I mean, M&A in general is kind of a headache for regulators. Adding in the social media component has to be absolutely nuts. So, are you following primarily like U.S. markets, or are you doing worldwide?
Actually, worldwide. That, that includes the U.S. Obviously. U.S. is part of the world, and but really try to look on things on a global basis. Let me just come back to that one point about
Sure.
social media and leaks
Yeah.
because it's really interesting. Because we just recently, in fact, it was sponsored by Intralinks. And we recently did something looking at leaks, and it's amazing to see what's actually happening with leaks. I mean, it used to be that people were thinking that leaks were when somebody left the proverbial, book at 2 a.m. in the morning on a taxi cab seat, and suddenly the deal got disclosed in the paper the
Hmm.
next day. But we're finding that leaks, and this is where the social media comes in, are much more deliberate than you would think they would be. Very rarely is a leak, and for M&A deals, leaks are critically important. Really is something where people mean them to happen, and they're trying to do it for their own benefit, or the benefit of the firm that they're representing.
Interesting. So is
Right,
it,
so
yeah, is it
like
like,
a
oh,
part of a strategy. Sorry, Jake, to talk over you, but you're saying like it's a timed leak and it's part of the plan from the get-go?
Yeah, yeah, well, I don't know if it's planned from the get-go. In fact, actually, what we found when we were doing the research on this is that um, well, first off, we found that there were rarely any leaks when the due diligence process was going on. And that what ended up happening is that you actually even had to wait until about 40 days, so slightly more than a month, from when people really started doing due diligence with each other to when you had leaks. So it appears not to be part of the strategy. What it appears more to be is that when something is not going in one company's way or the other, that they see it as being a benefit to get the deal out there in the public, either to try to rustle some other buyers out of the bushes, either to try to stop the deal if, in fact, things aren't going quite the way they wanted to, because sometimes with leak deals, um, that might stop the deal from taking place
hmm.
because one of the parties didn't want the deal to leak. In fact, we did find that again in the study that we did with Intralinks, we found that 80% of deals that leaked never completed, so never went to closing, whereas 88% of deals that didn't leak did go to closing, and that's a
Interesting.
pretty big difference.
Is I can definitely imagine, maybe even on the company that's being acquired. Let's say you're a hedge fund manager and you're owning a bunch of shares there. Maybe you'd nudge an employee to leak the details of the acquisition to try and get the price higher, or to try and keep it from happening if that's not the price that you want to get.
Yeah,
That could,
exactly. Or to try to get more buyers to come into the deal who might not have known about it before, that may not have been on your short list of potential acquirers, so that you really get an auction going.
Absolutely. Now, you obviously have, your fingers on the pulse of the M&A market. Do you see more deals in the near future coming in from the U.S. or abroad? What are you thinking on that side?
I think when we're looking at 2014, and probably most of the people who are listening are more concerned about that,
Hmm.
than what's happening in 2020 or what have you.
Right.
Although I'm happy to talk about both, but we see the U.S. really leading the way in the markets in 2014. The U.S. I mean, this is probably not a surprise to anybody who's listening. The U.S. is really driving forward in terms of economic recovery from the recession, much ahead of the rest of the world. I mean, all you have to do is come over here to Europe and see that it's not quite as bullish as the United States is. And we've recently done a study looking also at Africa and Asia, and they're not quite motoring along in the same way as the U.S. And I think the U.S. will therefore dominate a lot of what's happening in M&A in 2014, either as a buyer, and that may be buyers globally looking outward, or even as an inward, and of course the domestic market on that. That's not to say that there aren't some pretty interesting other places. I mean, when we were looking at Africa, for example, just going on that, we found South Africa, Mozambique, and Kenya kind of spearheading, the charge of African nations. We found Colombia to be quite attractive for a large number of factors. Over in Asia, China for the first time on our own list, because we look at countries in terms of their attractiveness, made it into the top 10. And interestingly enough, Japan dropping out of it. So China kind of replacing Japan, albeit not in a one-for-one replacement, but China going up, Japan coming down. And then interestingly enough, even in the Middle East, the United Arab Emirates, especially with a lot of what they're trying to do in technology and education, making it possible for a lot more deals to take place, and a much more benign regulatory environment than what they had before.
Definitely.
So anyway,
Yeah.
lots of things. I mean,
Yeah.
that's not, I mean, there's 140 countries out there. I could talk about each one, and I know you don't want me to do that. Yeah, there's some pretty interesting things happening outside the U.S. Although, as I said, coming back to my original point, I think if you had to focus on anywhere in 2014, it would be in the U.S. So.
So I guess so. If you're looking at the M&A market as a whole in 2014, do you think it's going to be a stronger M&A market? I mean, not just the U.S. but worldwide. Is it going to be a stronger M&A market than we saw in 2013? Do you think it's going to pull back a little bit? What do you think in
Well,
there?
Jacob, are you going to record this and play it back for me in a year to see whether I'm right or wrong? No, but seriously, it's interesting on that point. There were about, by the time we get to the end of December, so in another week or two, there will have been probably 2.2 or 2.3 trillion dollars worth of deals announced in 2013. I mean, I'm not expecting that number to change much. And the interesting thing is for the last 5 years, it's been between 2 and 3 trillion, and that's down from 2007, which was at 4.3, and a pretty significant decline. But we plateaued at that 2.2, 2.3 level, for the past 5 years. I don't see that changing, and that's not just me looking in the rearview mirror, but as I say, because one of the things that we do here in the M&A Research Center is we spend a lot of time, trying to look at what's driving the market. And although one can be quite bullish looking at the U.S., we're seeing some retrenchment in other areas, even though, as I mentioned earlier, there's some pockets that might be more attractive elsewhere. But I don't see much change in that number. Then again, I also would caution you, and anyone else listening, to think of that as being Armageddon. I mean, yes, it's not 4.3 trillion that we had back in 2007, but M&A deal activity of 2.3 trillion is, still a very big volume, and companies still need to do deals in order to be able to stay competitive.
Absolutely. I mean, I guess, whenever we're talking to an expert in any sector, we want to kind of, dive into, what they're seeing out there. So hearing what your thoughts are for the M&A market in 2014 is fantastic. Do you have any specific sectors or possibly even specific companies that you're watching right now? I mean, I know we kind of focus on the United States, but I mean, if there's anything out there like specific sector or even specific companies that you think are either targets or could be, huge players in the M&A market, what are your thoughts there?
Yeah, and I guess actually just again because of who most of your listeners are,
Hmm.
let me actually focus on the U.S. there on that.
Awesome.
I think we'll continue to see a lot of activity in telecoms. The retail sector is really hotting up right now,
Hmm.
and there's a lot of private equity and financial sponsor backed deals in the U.S. that are just itching to get done. And most of the time, you're going to get a better valuation. You're going to get a better exit value by doing a trade sale into somebody who actually wants it as part of their strategic business and selling it to another financial investor. And we're seeing that. And then the other part that a lot of people aren't talking about, is the manufacturing industrial side of things. So those three, I think, with the latter one being probably more of a surprise. But by saying that, I also don't want to say that that there's not going to be good activity in some of the other sectors. Although we don't see pharma, as we kind of try to gaze into our crystal ball being as strong as it was, in the past several years, I'd stay away from aerospace at the moment. So there's some sectors that I don't think look particularly attractive on the M&A side. I mean, of course, Boeing's going to announce a deal tomorrow and prove me wrong, but it's that's not a prediction, by the way. But but just to say that, generally speaking, overall, if you look at the next 12 months, those are the ones I'd look at.
Definitely. Well, I really do appreciate you joining us, Scott. I hate to cut this off, but we did just get the market open, and I know that
Gotcha.
our
I know you
traders
got
are
to
gonna be
open the market.
our
Yep.
traders are gonna be jumping up and down if we're not broadcasting about that. But again, thank you for joining us, Scott. This has been awesome. We're gonna have to do this again sometime, and see what you're thinking for the M&A markets. So thanks for joining us this morning.
Thanks, Jake, and happy to come back again.
All right, awesome.
Cheers. Thanks. Bye bye.